All right, there we go. So as you continue to log in, ladies and gentlemen, go ahead, make sure you drop it in the chat. Definitely need to know where you're calling in from. Definitely need to know, just definitely want to know. And also those affirmations. Now our affirmations is, I am an educated BYOB master trader anointed for wealth. See, and then I liked what I saw earlier, that bold and confident, right? Bold and confident, BYOB master trader anointed for wealth. So we always want to make sure, that we're walking in that and that we're actually operating in that mindset. So I am the signal, all my trades in and profit. I am 777. All right. And let me see what you guys have this evening, because it should be, this was a phenomenal week in the market. It should be. Oh my goodness, the market pays me, right? That's what it should be. And I think tonight to actually give you all quite a bit of clarity on, why I do things and why I train, why I teach the way that I do. Because one thing, actually, you know what, before we get started, I'm ready to dive in, just because you guys made quite a bit of money this week. But if this is your first time here with us this evening, your first time here with us, let me get a 111. And if you're still learning how to cash out, let me get a 222. Awesome, I see you. So welcome, and welcome back, guys. Welcome, and welcome back. All right. So now what do I mean? When I'm talking, so we do quite a few things when we get on the charts, right? We do quite a few things when we get on the charts. And for those of you all who are new, let me officially say welcome to Be Your Own Bank. This call is designed, let me give you our call schedule, which is Monday through Thursday, 5 a.m. and 9 a.m. We are live in the market. We're doing analysis, just really diving in and understanding what the market's doing. We're taking what we learn and we bring it to the forefront, and we make sure that you understand how to implement it. And then, of course, in the evenings on Tuesdays, that is our BYOB basics, okay? That's the basics. And knowing that that's the basics, what we do is help you understand there's a fundamental thing, okay? This is an advanced call, but there is a fundamental, and our pip master, Miss Anderson, she definitely walks you through that, help you understand the movement, who we are, what we do, and also where you're really going to be poured into, right? As far as understanding how you can compound, because that's important. Compounding is extremely important. And then on Wednesday, we have our BYOB Cash Out, HFX Simplified. And tonight is our advanced training, where we dive just a little bit deeper. I know some of you are like, it's not a little bit deeper, it's a lot deeper, but it's good because it's important and you need to know these things. So now, what I'm saying and where I'm getting at, right, is definitely want to make sure that you guys understand why we do things the way that we do them. Now, when we're trading, as we're looking and as we're going through the charts, right, a lot of what we do, we always, our cause is always affirmations, first and foremost. Then we check the fundamentals. We check the news, okay? So we definitely sit back and we check the fundamentals. And I tell you guys consistently, okay? I tell you consistently that we don't trade fundamentals. We use the fundamentals to analyze the market. Then what we do is we take the fundamentals, we use that to analyze the market, and then we turn around and we trade from a technical analysis standpoint. And so what I want you to understand tonight is you are your own bank. I want you to understand tonight that you are a BYOB master trader. And what I need for you guys to do, we know that banks trade our money, right? We know that banks take our money and they profit off of it. But they don't, I want you to think about the difference between them and you. The only difference is mindset. The only difference is they know it's not their money. When that employee walks in and sits down, That's like you in your demo account. You analyze your bold, and then all of a sudden, these emotions come from somewhere and from nowhere, right? So the reality is what bankers do. What bankers do is they go in and they actually have a calm mindset, right? I'm talking about market movers. It's not their money. And so they're not emotionally attached to it. And what you hear us tell you all the time is you want to get rid of your emotional attachment. You want to sit down, and so you want to make sure that where you're operating from is the right mindset. You know, this is why when we sit, this is why when we do what we do, this is why it's important to be in the right mindset. They also don't chase trades. All right. Bankers, people who, if you know a trader that's making money, they don't chase trades. Banks don't chase trades, right? They don't. They analyze and then they trade. So it's really, really important for you all to understand what we teach is in alignment to build your wealth. So we're never going to operate from a perspective where we're going to chase the market. We're never going to get excited about just a whoopla in the market, right? We're never, ever, ever going to do that. We're always going to position you. The bottom line is you right now have to make a decision. And that decision is you want to treat it like a business. You came here to profit. You came here to walk in wealth. You came here to learn to compound. You came here because this is a skill set. You came here because of what is available to you. That's why you're here. And so if that's why you're here, you want to operate like you really want to walk into that. So when you walk on your job, you do it properly. When you walk on your job, you walk in the right mindset. When you walk on your job, you're not emotionally attached because it's not yours. And that's where you need to be. This is why we cannot be emotional while we're trading. So the bottom line, we don't chase trades. If the market is on, then you're on. If the market is off, go do something else, right? So, because I get that question, oh, how many trades a day do you take? And I trade when the market tells me I can trade. I don't care about how many trades a day I take. If I trade, I trade. If I don't, I don't. But I'm not, because I don't force trades. I pay attention. And so the way we operate our calls, the way we do it is affirmations. You need to be relaxed. You need to be in the right mindset. You need to be able to sit down and see with clarity. And then you want to treat it like a business, right? So your affirmations, your proper analysis, you want to make sure that you're operating from the right perspective. And then you take trades when the market is ready. That's it. That's it. The vibrato can call 150 trades a day. If the market is not ready, see, the thing about tools, anything, they're not a person. They operate on the if this, then that. What you have to do is the human analysis. And what I want you guys to understand tonight, and you know, as we look at this and as you see, we're going to talk about the different, what moves the market. The bottom line is what's going to move the market. And so as we kind of go through this, and then after that, we're going to get back to our top-down analysis. I know we need to do that, right? So that's where we're going to go. And so this is where we want to be. And so we want to understand there are different types of markets. You hear us talk about it all the time. There are different types of markets. The fundamental is what gives the market direction. Yes, the fundamentals is what gives the market direction. Then, of course, it is the technical analysis, the strategy that actually the technical analysis strategy is where we actually go in and we really kind of dive in and we determine if we can take a trade. Now, when we're talking about the market, right? When we're talking about the market, there are different things that actually move the market. And so understanding that there are different things that actually move the market, basically fundamentals. What do we check every day? What do we look at every day? What do we sit down and look at? We get our mind right, then we check fundamentals. If somebody's telling you fundamentals don't matter and you don't need to do fundamentals, you need to run in the opposite direction, okay? Because you're gonna understand tonight exactly where that comes from, and you're gonna understand tonight exactly why that's important. So fundamentals is what moves the market. So those fundamentals we talk about all the time are central banks, we talk about our geopolitical, and of course, we talk about economic releases. So this is what moves the market. All right, those things that we talk about. Now, central banks, right? We check the news. I tell you to open those folders, open those folders, open those folders, open those folders. Don't run from the red folders. Open the red folders. So the central banks is what gives the market the trends. That's what gives the market direction. All of that comes from the central banks. So when you're looking at this, you have rate decisions, statements, market sentiment, all of the things we kind of look at. And so just a few examples, right? You have your retail sales, your CPI, your manufacturing, quite a few things. Now, the very first 2 weeks after these reports, the market is clear and focused, right? So these reports happen quarterly. These reports not quarterly, they happen at different times throughout the world, to be honest with you. So these reports come out. I mean, it gets deeper than this, but I want you to understand that these reports, they come out at different times. And so some of them every 6 to 8 weeks, some of them, they just come out at different times. And so what these reports do is they give the market direction. So that's why it's like, well, can I trade it? Can I get in this trade before the news? Can I do this? Can I do that? Absolutely not. No, no, ma'am, no, sir. No, you cannot. What you have to do is make sure you're paying attention, right? You want to make sure that you're paying attention to what's coming out, the releases. And it's no different than us waiting on NFP. And then what happened when we waited for NFP, then obviously CPI had great impact. Some of them come out weekly, some of them come out at once a month, some of them come out once every 6 to 8 weeks, some of them come out like Jackson Hole coming up once a year, right? So we just want you to understand that. And so, but when those reports come out, you have what's called your base currency and your counter currency. In those reports, it strengthens or weakens the currency based on how those reports come out. So it's going to strengthen or weaken the currency. When it strengthens the currency, then of course it makes that currency strong. When it weakens the currency, then of course it's weak. And so then of course you're looking at what it's paired to and how that impacts, and then you're able to dive in and take a trade. So you notice how sometimes I'm like, if you're a scalper, you're the only ones trading. If you're this, then you're the only ones trading. Or we want to wait. If you are intraday and a swing trader, which a scalper is just in and out of the market. That's what you are. Intraday is more like that. I'm going to go zone to zone. I need about 50 pips, 30 pips, maybe a little bit more. But a swing trader, you just let the trade sit and just let it ride. So that's really the difference. But currency moves are bigger. And so depending on your trading style, right, scalpers are always going to be in the market no matter what. But if you're looking for those moves, those nice trends, right, the way the market's moving, then guess what? You want these reports. So when I tell you, do not run from the red folders, run to the red folders, click them, open them. What type of release is it? What's happening? Because I know that like when we go at CPI, I should get some movement in the market. Look at GBP. Right? We just had some reports come out on GBP and look at how beautiful. This was a profitable week. Let me get a 777 in the chat if you all took profit. If any of you took profit on a GBP pair, not an indice, not anything else. If you took profit on a GBP pair this week, I want a 777 in the chat. And this is why when we were doing our analysis and everything and those reports came out, y'all slow on these 777s, boy, I tell, okay, there they go. So that's what I'm saying. And then the average daily range is normally about 150. So that's 150 pip move. So this is going to help you determine, right? Because nobody has time to sit all day in front of a computer, right? We can't do that, So nobody has the time to just sit all day staring at the computer. Now, do you need to sit in front of the computer to learn, to enhance your skill set, to do all of those things? Absolutely. Absolutely, you do. Are you going to have to go through some education, some growth? Are you going to have to do that? Absolutely. But this is what moves the market, okay? Just want to help you guys understand, this is actually what moves the market. And as you can see, by all the 777s, you guys have experienced this, but you might not have known why. And so when you're looking at these drivers, okay, looking at these drivers, you have your interest rates, CPI, GDP, retail sales, unemployment, consumer confidence, produce price index, right? I got retail sales twice, but hey, you guys get it. So, but the reality is these are the things that are moving the market. This is how the market, this is what pulls the market. This is what gives the market direction. This is what gives us those nice, beautiful trends that we like to go look at. So the long-term trades are with the central bank announcements. So this is what you're looking for. So it's not just look at the red, oh, do we have a red folder? Oh, okay, let me wait 30 minutes. No, this is why I keep trying to get you guys to stop being so, I can't, I'm the word I'm looking for, but this is why I'm trying to get you guys to stop being so compartmentalized or trying to memorize things the way that you do, and really start trying to develop a relationship with the market. Because if you have a relationship with the market, you're not running to the charts like that. If you have a relationship with the market, you are understanding. I mean, it's not, you're not trying to, oh, it's a red folder. 30 minutes now I can trade. You're trying to understand, what was that red folder? What did that red folder mean? How often does this come out? What's going to happen to the currency based on how this report comes out? And then based on those things, you'll begin to be able to apply the triggers, knowing what you're looking for. When if you take a swipe trade or anything like that, you know how to analyze it. You're the one that knows how to do it because you get the big picture. So it's so important to always, it's just so important to always make sure that you're focused on that. And then of course you have your geopolitical events, right? Geopolitical, and that it's a toss-up, because it can be a good trade opportunity. It really, really can be a good trade opportunity, but also it's a lot of risk. You see, it's like dead in the middle of the screen, just because with asterisks, because I want you to understand that there's risk involved in that. And so because the market doesn't have clear direction, the market can go one way, and based on political events, it can go another way. I mean, Afghanistan, okay, we knew the election. Then what about Brexit? And then what about COVID? We live, most of us on this line, I might hear this playback. You all live through trading with us through the election. You live through Brexit, right? We were like, oh, it's still Brexit, So we lived through that, and we were in a geopolitical event. As a matter of fact, it shifted our training style, because what happened is when we were in just a regular market, right? We were just, the economic market, just a regular market. And the market was just nice and beautiful. And we had nice long trades, and it trend one way, we get our reports, it trend another way. We might do 10 trades on the call. We might call 10 trades in the morning. And so then all of a sudden, it kicked off into a geopolitical. And that's when we started not getting any trades on the call. That's when we started shifting to training on those morning profit calls. That's when all of that happened, because the market had no direction. We still get our reports that kind of send it a certain way, but it had no direction. It had no clear direction. And so the normal flow, which are those nice, beautiful trends that we were used to, guess what? It broke down. The election, Brexit, and COVID. And so where are my nice, beautiful trends right now? Well, guess what? There is coming back. You notice that, GBP this week, right? It's coming back. However, COVID still impacts the market. And then, of course, now we have Afghanistan. So, and how we look globally, right? The U.S. is that force to be reckoned with. The U.S. always stands its ground. However, you got, and this is not a personal, this is just, once again, I only listen to financial news. And when you talk about financial news and you see that, then you start understanding it's not about how the trade whisperer feels. It's about what that other leader in that other country is actually saying about the way we're doing things right now. So how does that impact the market? And why am I focused on the US as opposed to other countries? Well, the US dollar is the safe haven currency. It is in the major currency pairs. Anything that happens with the US dollar impacts the entire market, not vice versa. So This is why we never do calls on holidays, on US holidays, or for the most part. And because it's the London session, we'll take off those holidays as well because of what's happening. But for the most part, this is why we don't do US holidays, because the market's open, but it's slow. So anything that happens with US is going to impact the entire market in its totality, right? In its totality. So now, what else? Right? And did I, hold on. I did, hold on. Did I not leave it on there? So, no, I did not. It's all there. So you have your central banks, you got your geopolitical, and you have your economic data. So all of those things, when you're sitting there looking at it, when you're really trying to pull it together, all of those things is what's moving the market. Now, I want you to understand something, okay? I thought I had forgot something, but I didn't. I want you to understand, banks, when we say be your own bank, guys, when we say be your own bank, we mean literally. Have you all seen something? If you have never seen something like this before, put a 111 in the chat. If this is the first time you've actually seen this, I want you to put a 111 in the chat, because I'm about to paint a picture for you. And I really want you to understand the magnitude of what we're doing. I want you to understand the magnitude. Okay, I got some 111s. I want you to understand the magnitude of the reality of what this is. This is a salary that banks pay to trade your money. So the skill set that you're learning, the skill set that you're looking at, right? The skill set, this is a salary that banks trade. And so when you understand that this is a salary that's being paid anywhere from $120,000 to over $300,000 a year, this is what's being paid to a person. But I'm gonna dive a little bit deeper, because before you really break that down, the banks have departments. It's not one person, and they got people in there with different levels. You have people that just, got graduated, got degreed, and went through that process. And so there's a learning curve shift in there. And so just like you have yours. And then, of course, then you go through, they kind of advance. And then, of course, you have the ones that's in charge. So then what I'm getting at is it's an entire department. And it's an entire department, and this is what they make. And then just to add to it, when someone is new to the bank, right? When they're new, the bank is going to give them $100,000 of your money just to learn. Did you hear me? The bank is going to give them $100,000 to play with to learn how to trade the markets. And so they actually start on, they can actually start, so let's just say you got $100,000, they can actually start where they're looking to make about $10,000 a month. Now, of course, that's going to fluctuate. That's not going to be bank to bank. That's not going to be set in stone. But I'm just trying to give you a big picture of the opportunity that you have in your hand and why you really want to take this seriously and why you want to understand, right? Because we're talking about 6 figures in 6 months. But the reality is the bank is trading your money right now, and they're playing with. Down a demo account, I'm talking about your money that's flowing through it. The banks can lose. They're willing to give a graduate, somebody who's brand new, just finished the quote unquote academy, and they're going to put $100,000 of your money in their hand to go trade. Do you really are you with me? Are you understanding what I'm saying right now? And so they get $100,000, and then this is but they do it seriously, and this is where some of us take $500, right? $500, and it's like, oh my gosh, I can't, what can I do? And you just go start pouring it into the market. No, you need to sit back and have a plan, because they have a plan. They understand what they need to make a year. They understand they want to double that. They understand what they want to make a year, so they break it down to what they need to make a month, and they break that down to what they need to make a week, and they also utilize proper lot sizes. Proper lot sizes, right? Proper. You say you want, yes, they are, but proper lot sizes. That's what they're doing. So the banks really get that. They're on a budget. Are you on a budget? Are you documenting your trades? Because their trades are being documented. Are you managing your stop losses? Are you managing your take profits? Are you managing all of those things? Are you over leveraging your account? What are you doing? And so this is why all of this is important. Are you making sure you have consistency before you start compounding? Right? 6 figures in 6 months sound real good. But at the same time, I need to understand that I must be, I must have some consistency, and I need to be in the right mindset. So what does that mean? Trading fits into what you're doing. Trading has to fit into what you're doing, meaning that it does. So and this is why some of you all get overwhelmed. It's not overwhelming, right? It's not difficult. It's just I talk about driving a car as an analogy all the time. I don't just get up and say, oh, I want to go drive the car. I drive the car because I need to. I drive the car because I have somewhere I need to go. Well, you trade because you have somewhere you need to go. You have something you need. The market is your personal ATM machine, but when your bank pays you, you sit down at someone else's job, you sit down there and you do it with you take it, you put in the best effort you can. You want to make sure your employer is proud of you, and I'm talking about before you get to the point to where, I'm talking about before you get to the point where you feel like, they better be lucky I'm here. But why does your mind shift to they better be lucky I'm here? It shifts to they better be lucky I'm here because the reality is you feel like you're the best at what you do and you're not replaceable. You see, you have to get in that mindset to where I'm gonna sit down, I'm gonna be disciplined, I'm gonna be focused, I'm not gonna chase trades. And that's why we're not on these calls like, oh, get this, get that, no, let's analyze these charts. Let's determine if we'll take this trade. We are serious about making money. Our product is profit. I'm gonna say it clear. Our product is profit, all right? So we're gonna we talk about psychological levels, but we gotta get our own psychological right? We have to get our own psych right. And so you want to do that, and you want to budget, you want to be under control, and you want to make sure you're operating in proper lot sizes. So before I pull up the charts, do I have any questions, comments, or testimonies? Any questions, comments, or testimonies? Because right now, just based on what we just did, it is absolutely, you guys should really understand why it's so important that when we dive into the market, the way we dive into the market, you understand why we do what we're doing. Any questions, comments, or testimonies? And I'm gonna go ahead and start getting this shifted over to the charts. All right, let me see. I'm switching over. So if you have something, kind of drop it in there and I'll see it. I just got to get this done and get my charts back up. All right. Oh, you're very welcome. You are so very welcome. That you are. All right. It's coming. It's coming. The chart is coming. I promise. Definitely coming. Just transitioning from the slides to that. All right, so let me see here. So no questions, comments, or testimonies. No questions, comments, or testimonies. And I'm actually going to use what we was working with this week, just for consistency purposes, right? So now, does that make it a little clearer, right? Why we do things the way we do? Awesome. We are literally walking out our affirmations. We are educated traders. Thank you so much. You are very welcome. So that should really bring some clarity to why we do what we do, right? So yes. Why the market moves some days, why the market sits still some days, why are we just sitting here talking to each other in the mornings, and I'm telling you to drink your coffee, why this, why that, that should, okay, awesome. It brings clarity. It should really bring some clarity. So what I'm going to do, let me see if any of this triggered. And you know what I did? I had everything there and I closed it out. how beautiful and how wonderful was that? But I do remember. So what I'm gonna do is first I'm gonna walk you through the strategy really quickly, and then I'm gonna take this currency from a top-down perspective. Okay, I'm gonna take this from that top-down. Look at all of this movement that actually happened, because I kind of want to bring it together. Now I'm also, because last week when we were on here, it was at this level, the 3,800. Let me see here. Before we analyze, I definitely want to make sure you guys remember last Thursday where we were, right? Let me come up to my higher time frame, because I'm gonna take this from a top-down analysis approach, all right? So you guys remember last week. If you weren't on here last week, that's okay. We'll bring you up to speed. So you see from last week, right? You see, hold on, we got a mic.
Put it in my
got a hot mic. There we go.
Oh no, that's right.
Hot mic. I keep muting you, and that's why I'm saying hot mic, because you keep unmuting yourself back. All right. So now, right here, this was last week, and it actually triggered for a sale, right? It triggered for a sale. But the reality is, when I look right here, all right, when I look right here, what we analyzed, and this is going to make sense because we're going to go through it, was all of the rejection that was happening. So you guys remember, because this is where we were. Okay, you guys remember? That was last week. And we had triggers over here for a sale. Now remember, the vibratos program is written on if X, then Y, if this, then, let me not try to get all fancy. If this, then that, do that, right? If this happens, then trigger this. Okay, that's it in a nutshell. I'm not an IT person. Don't want to be. Like, that's just not where my mindset is. But you guys understand what I'm saying. So the bottom line is, it's not a trigger. It's not a signal. It's a trigger. And I'm going to say it for the sake of making sure you guys understand on a recording. It is not a signal. It is a trigger, which means you have to come back and analyze it, okay? So this triggered, and it was for a sale. Now, I'm going to talk a little market structure, and then we're going to go down. So I was trying to see where we having some more triggers so we can analyze alive if we have time. All right, definitely, and we don't have any right now, but we had several. So what I want you to see is, I'm gonna come up a little bit. I'm gonna come up to the higher time frame, because I don't care what your trading style is. I don't care how you like to trade. I don't care. The reality is no matter what your trading style is you have to understand how to see the market, okay? You really have to understand, how to see the big picture. Even if you're a scalper, you need to, and so yes, I'm talking to everybody, even my super scalpers. You guys haven't been doing a little super scalping lately, but that's because of the market. But you have to understand why this does this. And if you're trading indices, I think I've had so many conversations over the past few weeks just about indices. And that's where, you guys kind of get, like, it's like you feel like the account rolls back, or because you're trying to scalp indices. And if you want the consistency, you have to understand how that moves as well, because it moves the same from, blue line cross over the red, the market and things. It moves the same, but the reality is it moves just a little bit faster. And so you don't have the reaction time that you need, because you'll be $50 in a hole real quick if you put the trade in wrong because you didn't analyze it properly. And so you want consistency in your trade account. I don't have to take 50 trades a day, but I do have to, whether I take one trade or 50, I need to make sure I have consistent trades where I've analyzed it properly, and then I'm taking a trade. So that's what we're looking for. That's what we're doing. And so if I look at this one, okay, I'm gonna just go ahead and kind of mark this up. Now, why didn't I come up here? Well, this is the top of the last trend, right? That's the top of the last trend. I'm gonna get to the strategy. I'm just trying to get you guys to see big picture. Now, if you guys have any questions, comments, or testimonies, I need for you guys to kind of drop them in the chat as I go through this, okay? Because I'm trying to slow it down a little bit. Y'all know I'm trying. All right. So now when I'm looking here, let me do this. I'm trying to show you this channel this was in. I'm not trying to get you guys to go mark. Hopefully you can go mark it up. But, you know, I'm just trying to get you guys to see tonight why it's important for you to see the market. All right. I'm trying to get you guys to see why it's important to see. Why is it important for you to go in and do the, you know, and of course, we'll kind of get a little bit into this, you know, and we've trained on it. We have, right? So many videos on the YouTube channel, market structure. We've talked about all of that. But what you're looking at right now is when this started, this is where that trend line, right? For a trend, you get touches. So now what you're looking at is right here. Now, this is the thing, all right? Everything that we've trained on, nothing has changed. You got that impulse, correction, continuation, correction, continuation, correction. I'm making a point right here because this is where I'm picking up from last week. The triggers were for a sale, and I want you to understand how valid they were. This morning, what I was telling you all is that you guys needed to wait. The market was going to correct. As you can see, I closed out all my charts because we don't have them, right? As you can see, they're not on here. And hey, it's okay. I did it. It was an accident. I didn't. So it is what it is. But the point I'm making at is when this morning we had trades that did the same thing. And we talked about the flow of the market, right? One of the things we just highlighted in the PowerPoint was the actual trend of the market, right? That's one of the things that we just highlighted. And so if my trend of the market, I'm still in a sell. So what you can see and what you can understand is that right here, even as this was selling, the market corrected. The market has to correct, guys. It has to. It cannot stay selling. It just cannot. Now, one thing I also want to make sure you guys understand is right here, right? So we know Elliott wave. We know the impulse, correction, continuation, correction, right? This was a correction. This was a continuation. The market corrected, but it never broke the last significant level, right? So we were still in a downtrend. And so when we say take a trade to your very first support and resistance, or 10 pips and cash out, or the first support and resistance, because there's no way you should have put a buy in right here. There's no way you should have put a sell in right here where the market was so overbought. But if I'm looking at this, I need the market to break through here before it goes higher. I had needed to break because this is the last significant level. We know that our waves is impulse, correction, continuation. It is just a little crazy market structure right there. And then it pulls down, correction, and we kept going down. And what ultimately happened is it actually broke through the channel. So this is where we are right now. It broke the channel. And remember, you guys remember me telling you that if it broke up here, we were closing out down here. Does that sound familiar? Does that sound familiar? So do I need to, okay, I'm like, do I need to wait? Because we'll sit here until 10 o'clock. We'll sit here and it'll be dead silence. Because I'm like, I know that should sound familiar. So if, we're looking at this, right, and you're seeing this is where a market closed out the structure, right? The market closed out the structure. So when I'm sharing this with you all because as I'm looking at this, right, we get our triggers and they come in, or we go to the harmonic scanner. Now you should see also why I think the harmonic scanner is a good one, why we spend so much time. The Academy has plenty tools. We've trained on them, we've used them, but we spend quite a bit of time between the vibrato and the harmonic scanner. Now had I not gotten sick, then we definitely would already be in the other tools because that's what we talked about. That's what I promised you guys, But I want you to understand before I start using other tools and before I start bringing anything else into this, you guys have to understand and begin to understand the big picture of the market. And that's really what we're looking at because now I know how to go in and take a trade. So if we have a trigger, I now know how to go in and take a trade. So we just looked at was, now it's important to understand your trends, very important, because what moves the market, what gives us our trending markets, right? We just talked about that. And so if that's the case, then shouldn't I understand what a trend is, right? And now you guys understand why I love these trend candles too, right? So, but shouldn't I understand what a trend is? Shouldn't I understand, what's happening? Shouldn't I understand? And so now when I come down to take a trade, so let's just stay in this zone right here. We're not going to counter trend trade and take that buy. What we're going to do is I'm going to change this. We're going to look right here. All right. Let's just kind of stay in this zone. Let's change the color. And we're going to talk a little top-down analysis. All right. Is that okay with you guys? Is that okay with you? So now what's happening is I got that blue line crossover. I got an exclamation point. I love y'all. So now as I'm looking at this, okay, and as you can see this, you see that blue line cross over the red, right? You see that's what's happening right there. And then of course, I see that red candle. So we know that we've been a nice consistent downtrend right here. We've been in a very, very nice consistent downtrend, right? That's ultimately where we've been, and down here. And I was trying to grab another box and kind of put it right here. All right. So, you see it. Look at there. Did the light bulb just click? I love these moments. It just click, click, right? It comes on just like a light. It's everything is dark, it's foggy, you can't see, you fumbling around. And as soon as that light bulb clicks, it's like, bam. Right? It's you can see everything that's going on in the room or the area of what you're looking at. So I love those moments. So when you're looking here, right? That's awesome. You're going to use this. You should. So as I'm looking here, right? And you can see, you're attempting to explain yourself the strategy. You got this, you got it. So as I'm looking here, right? I can see where I'm at. So you see how nice this matches? So now when I drop down, right, it's light in the fog. Aha. So now when I drop down to the hour, now you should understand why my hour and my 4 hour, need to be in alignment, right? And if we have time, we'll go pull up another one that triggers. So I'm just using this because this is what we've been getting triggers on this all week long. This has been pulling all week long. We've been looking at this all week long. Right? This is what we've been doing. And so as you can see from here, right? And you definitely see how this is coming down. Now look at how the stochastic, remember me telling you guys that you got to stop trying to look at it from time frame to time frame. And you have to look at it from, that you're looking at the same thing. I'm just looking at it from a different view, right? I'm just looking at it from a different viewpoint. And so now you can see we're still coming down, but look at my stochastic. Look how my stochastic is coming. Look what's happening with my stochastic. So we had a little alignment here, had a little correction, but then it's kind of pulled up before it pulled back down. You see, that's where it started again. Blue line cross over the red and downward momentum, and we have that downward swing happening. But in the midst of this, what we're focused on, right up in here, what you're seeing is, how the market is reacting. So we had some nice downward momentum. It started here, pulled down some, it didn't go anywhere, corrected, and then it kept going, and it's flowing with that 4 hour. Now I come down here to my 15, okay? Come down here to my 15. Now this is where we start the strategy from. This is the foundation. So even if I'm looking on my 15-minute chart, right? All right, I'm back. Even if we're looking here on my 15-minute chart, this is what I mean about if you take a buy, you're counter trend trading. If I take a buy, if I take any of these buys, I'm trading against the trend. This is where you guys are hit stop losses, okay? This is a risky trade, but you have to make that decision for yourself, because some of you all do it and do it very well. Some of you all do it and don't do it very well. So you have to understand how to take the trade. And this is where your patience profit comes in, because you want it to be in alignment. You want these things to be in alignment. And then of course, why do we drop down on the 5 minute? Because now I'm starting to look at entry. Now this has to still be selling. So what happens is we get triggers on the 5 minute. Okay. As a matter of fact, let's just jump over here on another chart and let's do it. Now, guys, if you have questions, comments, or testimonies as we go through this, questions, comments, or testimonies as we kind of navigate through this, please, please, please ask your questions, okay? Ask your questions, ask your questions, ask your questions. Drop them in the chat. All right, so this call price, right? Let's put this trigger on here. All right, let's put this trigger on here. Okay, and this triggered at 90888. We didn't even get to the psychological levels tonight. Now you guys see why I don't use a lot when I tell you guys, oh, I don't need a double top, a double bottom. I don't need X, Y, and Z. We're going to let the market speak to us. We're going to take the triggers, and then we're going to, from the scanner, the triggers, even if it's a swipe trade, whatever it is, you know how we say, you know what? We're going to let the market speak to us. We're going to let the market. I'm not relying on something to tell me what my trade should be, might be, or anything else, right? Not relying on any of that. So this triggered for a buy, right? GBP AUD, and it triggered 14 minutes ago. So here we are on a 5 minute chart. Now understand, look at all the activity that's happening compared to the higher time frame. Do you see all of these triggers? Because I'm not going to do that one in this much detail. We only got about 10 minutes left. But do you see all of these, like all of this activity? Do you see structure inside of structure? You see the market moving. You see all of this happening. Look at all of this, all of this, all of this. I can zoom in if you need to see it clear. Do you see all of this happening? Well, this is why more triggers come on a 5 minute, right? Do we get some on an hour and a 4 hour? Absolutely. But when we get them, what do they look like? And I went over too far. What do they look like? Well, am I really going to get a trigger on this? Right? I might get a trigger here, but each one of these candles is 4 hours. Each one of these candles is 4 hours. And during this 4 hour time frame, it was straight down. So I might get a trigger here. So just like, they might not have none now because of the time, but there's none, like I said, might not be none now because of the time, but you've been on here, and then sometimes you'll see after a news report or something, you'll see some that come out for the hour, the 4 hour. So after we just kind of went through that, you'll see those come out, but it's not consistent. It's not every day, right? Well, now you know why. And so as I'm looking here, I'm going to get a lot on the 5 and the 15, because when I drop down to the 5 and the 15, guess what? This is where all the activity is. Look how many candles are in here now. So you're going to get reactions, right? You're going to get that. So when we get here, right, and we get a trigger on a 5 minute, I still need to look higher. I need to look higher. Does that make sense why I'm so adamant about that now? Why I tell you guys to go look at where you are? Why I'm like, you still need to know what's going on, right? That makes sense now? You should. So now when we come up here, right, I'm gonna just come on up here for the sake of time, before I go do the 15 minute, the analysis and everything else. So now actually it triggered on the 5. I do need to check the 30. We're gonna look at it right. So what happened is it triggered on a 5. Look at that candle. That's a very probable, right? That's a valid trigger. Triggered on a 5 minute. That's a valid trigger. Now, when I come over here to my hour, look at this. Oh, we sitting pretty, right? Looks good. Now, what's happening on my 4 hour, right? So my 4 hour, even though we were overbought, do you see how it corrected some before it decided? Remember how I always tell you, don't know where a correction is coming to. So yes, the Fibonacci's are beautiful, but that doesn't tell, it tells me where it can go to. It doesn't tell me where it is going, right? So just look, right? So you can definitely see what's happening. You look at what this is doing. And then of course, as I come here, I need to kind of squinch it in a little bit. I remember this one. Let me see where we are. Hold on. Yep, this one, it's been over a year. That's what it was. So matter of fact, this one actually kind of bypassed that area a little bit. So now you see that it's still quite a bit of momentum. So we haven't been, you see I'm on a daily chart because I needed to look left to see where we were. And so this is where you can kind of come start, look, we got a psychological level up here. Let's mark up our psychological level. All right, so I put it too high. So make it blue, nothing changed because we're on an evening call. Now, nothing changed because it's the nighttime. So it's still possible that this thing can push up. It hasn't gotten to the level yet. I would definitely pay attention. You got 90, 91, 92, right? I'm looking at market structure and levels. So please do not bypass the ones that are in there. You still got the 94 in there. You got the 91 in there, the 92, the 93, right? I'm just trying to help you guys see the market right now. So as you can see, matter of fact, if I do the 91, because we were close, the 900 right here, right? Where we were looking at was it going to break before, and it did break. Remember? We were like, it needs to break, it needs to break, it needs to break. Well, look, gosh darn it, it broke. So right here, it broke. And now, as you're looking, it got here and it pulled back. So the reality is as you look at this, it's valid. Everything is beautifully set up, except that 4 hour. But that 4 hour did pull back, right? It did pull back.
There's so many things in the sport that are out of
Y'all in these hot mics tonight. But you can see, look at you can see where this is kind of pulling up. So doesn't it need to break that? So can you see the validity in this trigger, right? But wasn't it important that I know? Because now you know, or you can actually make a decision, is that trade even worth it? Is that trade worth it? Is it worth the risk? That's what you call proper risk assessment, right? We tend to think of the word risk as something bad. It's not something bad, right? And to be an entrepreneur, it requires risk. In order to have something more than being average, it requires some risk. In order to get up and learn how to walk, it requires some risk of falling down, right? In order to, there's a risk when you go on a job interview. There's always risk. And so we got to stop thinking about, risk like it's a bad thing, because proper risk management in the military, before we did any event, we did a risk assessment. So what you're doing is your personal risk assessment in order for you to take a trade. And so now when you do your personal risk assessments, is this worth taking a trade, knowing where I'm at in the market, understanding I've already broken, knowing that I'm higher up here, right? Knowing all of that, is it worth it? And then knowing how strong is GBP really that strong, or is AUD just really that weak? Because if we come over to this other chart, GBP not looking too good over here. GBP is not looking too good. It's not. I mean, it's looking good because we make money no matter what direction the market's going. But or is USD really that strong, or is GBP just that weak? I mean, it's obviously not that weak if it's pulling up against AUD. So it's either USD is really strong, or AUD is just really weak. So which one is it? And so this is why checking the news and understanding, once again, is so very important. So we kind of did a lot tonight. We'll analyze some trades all next week utilizing this. So on the 5 o'clock call, the 9 o'clock call, everything we look at, we're going to do it this way. We're going to show you how to implement this, help you guys understand why we go in, why we check the folders, why we do what we do. And then, of course, we're going to dive in and analyze every trade that we do from a top-down analysis approach. The strategy is still the strategy. You have to understand the strategy. You have to. And if you didn't learn anything else, you should have learned it's not entering a trade on the 15. It's not entering a trade on the hour. It's not entering a trade, right? We always enter low. We always actually enter low. You analyze high and enter low. Analyze high, enter low, right? Analyze high, enter low. 15-minute chart is my foundation, helps me understand the strategy. It's really helping you fine tune those entry points, right? That's kind of where you really in that nice groove. So the 15-minute chart is very important when we're doing our analysis and everything. And the lower time frames is where we go in and we tighten up our entries. So any questions, comments, or testimonies before we transition, you will see this, all right? You will see this. You will see this next Monday through Thursday. Next Monday through Thursday at 5 a.m. and 9 a.m. Eastern Standard Time. Questions, comments, testimonies. It was very helpful, very, very helpful. Awesome, awesome, awesome. Questions, comments, testimonies before we close out. Now, if you're new to this call, because I did see some one-on-ones, what I want you guys to understand is we've been building on top of this. And so I want you to understand that you definitely are going to be in a position where you're going to really be impacted and be your own bank. You're going to be in a position, to really take advantage of that. So you want to stay plugged in. You want to see how we come back through. We analyze the charts. You want to make sure that you're walking with us. And I can tell you, when you operate, if you're ready to be free financially for real, and I'm not, I'm never going to bash somebody's job. But what I will say is you need to love your job enough to do it without getting paid. If you love your job enough you're willing to get up and go every single day without getting paid, then you really don't love that place. So, because some people really like what they do and they will go volunteer. But I just want you guys to understand that there's a difference in being tied down and being free. And what we're trying to share with you and show you is how to be free. So if you want to be free, then you want to make sure you just buckle up and understand and really take the time to get to know this information, because it's definitely going to free you. So you said this has been a fabulous week. Absolutely. It really, really has. Thank you. You are so very welcome. Thank you. You see clearly now. Facts, very helpful. This was outstanding. Have a wonderful weekend. Thank you. You are so very welcome. All right. So what we're going to, blessings to you too. Blessings to you too. So guys, don't go anywhere. Don't go anywhere. Don't go anywhere, because it's time to transition this call. Just know I love each and every last one of you all, and I want us all to be walking in wealth, right? All of you. You see how I said us. All of us.